And we are live. All right, Brandon, meet Brandon. No, two Brandons on the show, right? For everybody watching, thank you for joining in. It's nice to be able to link up with vendors and partners in the industry that really are true experts. And today we're going to be talking to Brandon Kolk from Brightway Insurance. So, and Brandon, you both are co-owners of Brightway Insurance in the Springs here.
Yep, that's right.
That's awesome. If you want to take a second, introduce yourself. Kind of want to hear just how you got into the industry, and then how you are servicing people here in the Springs.
Yeah, sure. Let's see. My whole family's been in insurance. My dad's coming, so it's kind of a genetic
Oh
thing.
wow!
They just go right into it, right?
Yeah,
All the
the door's
family.
open.
Yep. So I left college, went and worked claims for approximately 8 years. I was a trainer for the last 3 years, teaching people how to look at a house that's completely gone from a hurricane or tornado and stroke checks for it. I've written over 200 million in checks in my career. Written the estimates, so I've done it from the ground up. And there was no better way than just to get into placing those policies. And that's what my wife and I do now. So we bring all the expertise. She has actually like 16 years of writing checks. I bet you she's over 500 million in checks that she's written for customers, which is crazy. But now we run an agency that just gives the correct way to do things if somebody wants to hear it, right?
Yeah. Education is a big key in there, right?
Education is a huge key in insurance, especially in Colorado. It's a little wild right now, which I'm sure we'll get into.
Yeah, no, absolutely. One thing that I have learned over the years of being in an industry is okay, well, you have like what is insurance? People just throw around the word insurance, right? And you've got different types of insurance. You got different types of retail, you got brokers, you got all different types of people that own and run and operate within the industry of insurance in itself. Right. Can you kind of like just talk to what I know you're a broker, but can you explain that to the people that don't really understand the differences?
Yeah, sure. There's basically two different types of agencies out there. You have captive companies, which is the ones you see on TV generally. Those are going to be the ones that they heavy market and hope that you call them up and get a quote, and they sell just that one product. Brokers, on the other hand, are selling hundreds of companies, and most of them don't do any advertising. I'm their advertising. So it's a completely separate thing, and nobody looks at it that way unless you're in the industry and you see it day to day, like in the position that I'm in. But from a consumer standpoint, there basically is no difference between me and a captive agent like a Farmers or American Family. So we generally try to explain that, and we're more into like curating types of policies and accounts for them instead of just quote and close.
Right. And the advantages that I see for clients looking at that is say, hey, you have options. You can you're more flexible in the items that you can. I'm back.
Yeah, can you see me? Yeah.
Okay. We had a little drop. I have no idea. Connection is fairly good. Okay, I don't know why, but anyways, all right, moving on. But the advantages of having someone that can look at different types of policies, I guess, or what I'm trying to do is really highlight the differences between you and potential captive or non-captive agent that's able to provide more options, I guess.
Yeah, so let's take off one more layer and go a little bit deeper. So if you're at a captive agent office, again, I'm just going to pick American Family just because a lot of people see their commercials. If for some reason the rate goes way up or the home or auto or whatever the policy is non-renewed, well, now you're on the street, you're on your own. In an independent or a brokerage office, well, it's not a big deal. We just find another place for it. In Colorado, we are for sure the toughest state with insurance right now overall. You got California and Florida. They have their own issues, but overall, we're pretty turbulent. So companies are constantly jockeying for position and changing what they're doing. So you might stay with a company for 1, 2, 3 years at our agency or our brokerage, and we have to move you somewhere else because they're leaving the state. We had 9 companies leave Colorado, and that list is growing. But that still leaves dozens of more options for most consumers. So that's kind of the difference. At a captive agency, you're on the street. You're a homeless insurance person at that point. And then you got to go out and find your own captive agent again, or find a good broker. In an independent office, a good one, you can just stay there for the life of yourself, and they do all the work for you.
That makes sense. And I know with dealing with I have like 2 sides. So my personal side is clients when they go to buy a home and everything like that, and we go through, and we'll get through that in a minute. And then also just people looking for different types. So different types of insurance. And can you kind of go over the types, or are there any types you don't cover?
You talk about homes, or just overall, just different types of insurance?
Everything.
Yeah,
everything.
I mean, you're most of the time you have your homeowners. Somebody buys a house, they have to abide by the mortgage and get a homeowner's policy. It's pretty straightforward. You have auto policies. You have all the.
But you guys cover everything, right?
Yeah. The easiest way, if somebody asks me like, what kind of insurance do you do? We do everything but health insurance.
Okay.
Yeah. So that's like the easiest way to explain it.
Yep. Mm-hmm. And get into a little bit of the Colorado side of things, dealing with hail and everything like that. I'd like to jump right into we talk about this because it's so important. The roofs in Colorado. I know a lot of companies have been really stringent on what they look for, and we had a conversation recently about, hey, like there's a cutoff. It doesn't matter the condition of the roof; it's an age thing, right? So I think educating people, and I'm taking more deliberate ways to educate my clients on really or emphasizing how important it is to say like, hey, when we submit this contract, obviously we've already did our checks and everything like that, but we're looking at things like that. So can you talk a little bit about the struggles of the roofing side of things, and we can kind of go into the other sides as well? But
yeah, so basically, there's 3 different types of roofs that you're going to find in Colorado. The 2 that don't follow what I'm about to talk about are metal roofs and any kind of concrete tile roofs. So that's a whole different ball game. Those last 20, 30, 40, 50 plus years. So throw that off to the side. What we're really talking about in this main conversation that we talked about, I think that was a couple days ago, is asphalt roofs of any kind. It doesn't matter if it's a 50-year asphalt or a 30-year asphalt. They all fall into this one category of most companies are going to look at it different when it's 10 plus years older. And they're really going to look at it a lot different when it's 15 years plus. At that point, there's some companies that just won't write the homeowner's policy. And I think we talked about this as well. You could have a roofer go up there and be like, this roof looks brand new. The insurance company doesn't care because they're just blanket basically all of Colorado and just saying, we're just going off the age, right? Because in the large numbers, if you want to look at it that way, law of large numbers, an old roof is going to damage a lot easier than a brand new roof. So that's why they're looking at it. So that's your hail part of the loss that we're looking at. That accounts for billions a year out of insurance companies' pockets. So they're just becoming hypersensitive to it. Let's see, what else is there? Once it's over 15 years old, if you're like in your profession, you're trying to sell a house, that's going to be a real tough sell because I can still do a policy for that, but it's not really going to cover the roof. It's going to be what's called actual cash value. So if it's a 20-year-old roof and it's supposed to last 30 years, you're now 2/3 of the value is gone. It's thrown in the trash. So you're going to get 1/3 of that value, less the deductible. You basically have pennies in your pocket. So it's generally just not covered. So now that customer may have to come out of pocket 20 to 30 grand, depending on the size of the house, to replace that roof. And that's a lot of money for most people that bought a house, right?
Yeah, absolutely. Is there any advice on giving people to, I mean, there's not much you can do, right? It's just, you just have to check the age, make sure your due diligence is gone and you're comfortable with that risk and the options available, I guess, right? There's not much you can do.
Yeah, we try to give some guidance. We have hail maps of where every hailstorm was over the last 25 years. So let's say you're in 80906 down by the Broadmoor, southwest side of Colorado Springs. And you're buying a house down there that the roof hasn't been replaced in 13 years. you're most likely going to have some hail damage up there. So maybe we get a professional roofer to come out and actually take a really close look at it. Maybe there is existing damage that isn't necessarily caught in a general inspection. So we might say, hey, we got a couple of roofers, call one of these guys. They really know what they're looking for. And that could help in the home buying process and help in the insurance process.
Right. Now, as far as rates go, I know the rates have been going up, and there's, I'm sure, several factors to why they're going up. Can you talk a little bit of the impact on rates going up in the area?
Yeah.
I know that might be a can of worms. Yeah.
This could be literally like a 3-hour conversation. But and I think we talked about this the other day. You could pretty much say any word and yep, that's the reason it's going up.
Yeah.
Inflation was a big one. That compounded the cost of claims. So if we went back 3 years ago, a $30,000 to $50,000 hail claim was now $80,000 to $110,000, right? Overnight. I mean, that's a quick amount of time to go up that fast. The cost of everything to do with that claim was more expensive. The cost of the employees, the cost of everything. I mean, you name it, the answer is yes. So overnight, companies are spending 100%, maybe more on the cost of the claim. And the severity is getting worse. If you just take the front range, we're packing all these homes with all these fancy roofs into a small area. And now you have 300% more claims than you did 3 years ago or 4 years ago. So it's just everything involved in it. And then the companies, because of a lot of other different reasons, if you just take any insurance company that is represented in Colorado, they went from spending 88 to 90 cents per dollar that was brought in, which is a good number. That's good. That making a 10-cent profit per dollar is great. To now spending over $1.30 per dollar that they bring in. So if that was me and you, if you make $100,000, let's just take taxes out of it. But this year you spend 130 and you keep doing that every year, you're going to be broke and you're going to go bankrupt. Right. So it's the same idea with the insurance companies. So the reason, if you take all of that basic information and you think about what happened in the last 12-ish to 18 months, people saw their insurance premiums double, sometimes triple. And that's to catch up for this, all these different things that are happening so they can stay in business in Colorado and not have to pull out. But unfortunately, we've already lost 9. I think we're about to lose 2 more in the next couple of months. So that what happens is you decrease the supply of insurance companies, and then you increase the price of the ones that are left behind because they're picking up the slack. So,
right. And what's the overall, I guess, normally without them, fleeing Colorado, was it like 30, 40 companies, or what's the kind of amount? Just a
total like homeowners insurance companies?
Yeah, just people that, like you said, 9 are pulled out or 2 more maybe out of how many is that? Is that a huge, like a 50%, 25%?
Yeah, it's probably, let me think, probably like 15%. But the problem is they were the really good companies. They were the great companies to have in Colorado. Not that we're left with a lot of bad companies, but we lost a couple real good ones. And that hurt bad.
When you say real good ones, what does that mean?
So, and this is a whole complex conversation, but I know that most consumers, their number one thing is they look at the price of the policy. But there's a huge difference between policy A, B, or C, or company A, B, and C.
And what they actually cover.
Yeah, the amount that they pay out and how well they pay out. So we had some companies that during the Marshall fire, which was up near Boulder, like Superior area, they lost, I don't know, over 1,000 homes. It was crazy. It was back in December of 2021. Well, there are a lot of companies that you see on TV that left people basically homeless overnight. But some of the really good companies, those people flourished. Not only were they able to replace everything, but I mean, they literally came out of pocket nothing. So they had a bad thing happen with their house burned down, but they were completely repaired financially, right? And that's huge. Those ones that did that are gone. So what we're left with is 1 or 2 companies that are really good and some average companies. But unfortunately, customers don't know that until they have a big loss. And maybe they save $300 on that policy, but now they're out of pocket $300,000 to $800,000 in a total loss fire. So it's a
That's huge.
It's an impossible conversation to have because we're
Yeah.
very focused on price, and understandably so, because you went from paying $1,800 a year to paying $4,000 a year. So you got to try to find a cheaper policy, which means less coverage.
Yep. And if you've never had anything bad happen to you, you don't really have to go through that process and understand that.
Yeah.
But for someone that may or may not have gone through that, is there a decent way? I would assume just picking up the phone, but how to pick apart these, mediocre companies versus the good ones,
Yeah, actually, I met with an attorney a couple weeks ago, and we had just an awesome conversation at lunch. We stayed at lunch like 2.5 hours. I was just blown away with like some of the things that he was talking about. And he's a really good personal injury attorney in Colorado Springs, and he basically said, when it boils down to it, trying to stay away from companies that aren't paying for celebrities and aren't on TV, just banging out the marketing, right? And if you think about it, that's almost everything that's on TV. What's really good in a commercial that you go out and buy and it's great, right? They're just hammering marketing. So brokers have access to everything that's similar to what you see on TV, all the way up to really, really good products. And I was thinking about it this morning with one of my team members. There's really only 2 homeowners policies left in Colorado that are very, very good, but they cost a little bit more than your average policy by about 10 to 15%. Most people don't want to pay that, $200 to $500 more a year, but it's an exceptional policy that covers everything. All the other policies that are on TV or that just aren't as good. And I think I'm trying to think of this on the fly, but nobody ever asks me or any of the team members, what's the best policy I can get? That never happens. It's always, well, what's the best price I can get? So it's very tough in our position to say, here's a really cheap policy, and then here's a really good policy. That just never that's not what consumers want. So it's hard to explain, but there are literally only 2 homeowners policies left that are really good. That's the crazy part.
Yeah.
Everything else will leave you with a lot of money out of pocket.
Wow. Okay. Well, that's good to know, because I know we're going to have a talk soon about my personal homeowners insurance and all that good stuff soon. But as far as the rates, I know there's a lot of things that go into it. Are any items that are, hey, you need at least these items, and it might be case by case. Maybe I'm not asking the right question, but just curious to what if someone's trying to figure out what do they need. Is it on their lender requirements? Hey, what's your minimum for the lending, or what's the minimum that I should have to be breathe comfortably?
So what we do in our agency is our main focus is self-insuring for small things like I don't know, somebody steals your lawnmower, right? I mean, you don't need to file a claim for that. Some people do, but I wouldn't do it.
No.
So we self-insure for small things, and we use insurance for things we can't or don't want to afford. So let's start at the biggest thing, right? Your house burns down. And that's actually pretty simple of a claim as long as you have the coverage. So is the house insured to the correct value, which we do for customers? How much personal property do you have? If we're having a one-on-one conversation, you're like, how much personal property coverage should I have? Brandon, I have no idea. I don't know how much stuff you own. Do you keep all your stuff in a 5x5 storage unit, or do you have a 7,000 square foot house packed with stuff? I have no idea. But I always tell people, aim high, because it's rare that you have too much personal property coverage should your house burn down. So we start at these big things and then work our way down. And what it does is it helps solidify the actual conversation of why you buy insurance. And it's not to cover tiny little things. It's to cover things that are generational changing. Like if you have kids and your house burns down and you're out of pocket $1 million, that's going to affect your kids, right? And possibly their kids. It's no joke, right? You're out of pocket $1 million. So worrying about the big stuff is actually the easiest conversation once you can kind of reframe it and have that open conversation about what are we actually trying to do here. That's actually what saves the most amount of money, because whenever somebody's looking at rates, what's the lowest deductibles I can get? Can I cover my jewelry? Can I cover a handgun that's $400. Yeah, you can cover all that stuff. You're going to pay for it. And do you really need coverage for those small things like that? Right? What if we went with higher deductibles? What if we cut out some of the things that you just don't really want or need? Now you're actually saving money over a long period of time because it's not a 1-year policy. You're going to have that house or a house for the rest of your life. So you have to take all that money you're ever going to spend and evaluate the next 40 years, not just this year.
Yeah.
Does that make sense? I think I'm explaining that correctly.
That definitely makes sense. I think it boils down to, well, one, the individual, and then having people understand that it's a funnel, right? And trying to boil down to like, hey, let's go big and then start dialing it in. And really, I think people get distracted with, oh, I need to insure my, like you said, gun, or like I've insured my GoPro before, like, and it was like barely anything. I was like, oh, this is great, but at the end of the day, I was like, okay, do I really need to insure that? I think it's more of a fear thing people get caught up in.
Right. Let me give you another quick example. This is the biggest one in Colorado. And I'm going to go over to auto insurance here for a second, but it's really no different than home. It all follows the same principles. So every claim in Colorado counts, whether you see it directly or not. And that's called claim frequency. And then it goes against your insurance score, which is hidden in the background, kind of like a credit score. And let's use auto insurance. You buy a 2022 Tesla Model 3, right? It's got a big windshield on it, and those windshields are generally expensive. So the first thing people look at is, can I get a 0 deductible on the windshield? And we always say, you sure can, but I wouldn't buy the car if you can't afford the windshield. Let me give you the example here.
Yeah.
So a customer had a crack all the way across on their Tesla. And to go through insurance, they could have done it for a very small deductible. And the windshield replacement company would have charged $1,900 to the insurance company. Okay. Now, nothing out of pocket yet for that customer. But do you think that the insurance company is not going to let $1,900 go and not charge you somewhere? So it's going to hit your insurance score. It's going to bring it down. Now you have a claim. Maybe you have another windshield claim and a towing claim or something. All these small amounts of money. But what you could have done is kept insurance out of it and paid a cash price of $800 instead of $1,900 to have your windshield replaced, right? So the cash price is way less than half of what they were going to charge the insurance company. To do that $800 that customer would pay out of pocket keeps that claim away, which keeps their insurance from going up down the road and them getting not only that $1,900 back, but probably times a factor of 3 to 5 over a period of time for that one claim. So you can take that and run with it on any PNC insurance in Colorado, and that's the correct way to do it. Pay out of pocket for those small things. If you can't afford an $800 windshield, you shouldn't buy this $70,000 car, right? So
that example hit home pretty hard because my wife and I both own a Tesla, and we both have currently cracked windshields in the very bottom of each of them. And we're like, well, we're not taking a claim out of that because it doesn't make any sense. Like, when we have to actually replace it, then we'll replace it. So it's kind of funny how that goes. So let me back up for a second. So we did have a couple of chips. So we went and had the Safe Light come out, and they repaired the chips after like 4 times. And then after the 4th time, they're like, you got to get a window replaced. They ended up getting it replaced. I think I can't remember now if I used insurance or not. But do the chips also have that same impact on like individual small claims for what you're doing?
100%. Yep. So most companies in Colorado will pay for the chip repair for $0, right? And that's usually anywhere from $35 to $65 for a chip. But think about it, like from my standpoint, when I see that, I go, well, it doesn't matter how much they paid out. The $65 doesn't matter, but that claim is a killer. That's like not paying your credit card for a month. What does that do to your credit score, right? You're going to have a missed payment, and they're going to ding you, right? So your credit score is going to come down. The claim is the exact same thing. I'm probably like the best person to look at what I pay for my premiums and where all my stuff is, because I have the lowest rates of anybody you'll ever talk to, because I only use it for massive things. And it's been 15 years since I've had a claim. So my rates are ridiculously low. Yeah. But then you go look at a customer that has 5 windshield claims in a year, and maybe it's on a car that the windshield's only $250. Their rates are incredibly high, right? Because they're using the frequency over and over. because it's not just the cost of the claim, it's all the people you have to pay for in the background to get the claim done. So
Right.
it gets incredibly expensive.
What about time of so say it was 2021 that happened, right? And then now 2024, does it kind of die off a little bit on those claims, or is there like a
It,
breathing period?
yeah, it depends on the company. We have some companies that only look back 3 years. I'd say the average company looks back 5 years, and we have a few companies that look now at 7 years.
Oh wow.
Now that's at active claims for new business, but um, I'm not 100% sure, but I would care to say that the claims will follow you for a very, very long time, but they become less relevant over a period of time. The best you
Gotcha.
could do is just try not to have claims or self-insure for the small things, use insurance for the big things you can't and don't want to afford, just starting at a point and going forward. That's the best advice I could ever give somebody.
You said self-insure. Does that mean just paying out of pocket?
Mm-hmm.
Yep.
Yeah, you buy a Range Rover, expect that windshield's going to be $1,500 to $2,000, right? And if you can't afford that, then don't buy the vehicle, right?
Yeah, I 100% agree with that.
Yeah.
And as far as going to the client side of things, so I have a particular client. Hey, we got this. We have this house. It was insured. They did a claim. We'll just say, and this is an example. They had a claim on the sewer line or whatever. Now a new buyer comes in and they go, is there an impact to that new buyers based off of previous claims on a different person that owned the same exact home for the same potentially same item or different items? This might be a little.
No, that's a good question. And it's kind of ironic because we were just talking about this yesterday. If we went back 2 years ago, there's not a single company in Colorado that cared about that. It was only based on the customer themselves, so the person buying the house, and any previous properties that they owned. Now we have two companies that look at both of those things and the house that they're about to buy and look at the history of that house. And that's a whole new ball game for us.
Wow.
So that's a whole nother conversation that we won't have with the customer. Like if you refer them over to us, I'm not going to be like, don't buy this house. This is terrible. I'm going to have a conversation with you and say, this one's going to be really tough. They had 3 backup claims. So this house has a bad history. So we're limited in what we can write as far as good policies. So,
right.
But absolutely, that's becoming a very popular thing.
Yeah. And then what about people that potentially lose a policy and then they try, hey, like this thing. So I'll give an example. If a client is in an estate sale, right, and he's kind of distance from what's going on, they don't notify him. He loses the actual insurance, right? It lapses. He goes, hey, why did it lapse? Put me back on. And they're like, well, we can't insure you anymore. Do you know what the best advice for people to do for that in that particular situation? Because it's almost like they have to just restart the whole process again and find someone that can insure them, right? Because it lapsed.
You're talking about home insurance, right?
Yes, I'm sorry. Yes, home insurance. Sorry, jumping around.
Yeah, and that's usually not that big of a deal, except if a house is in if it has a very old roof, or if it is
a fire zone.
Wildfire, brush fire. I mean, what happened just the other day? We had a huge fire up at Air Force Academy. Did you see that? I mean,
yeah,
it's February.
You can see the smoke from the house. I know that's scary. It's damp too. It's damp.
It's wild. So as long as there's no eligibility issues with the house and the location or any way that it's built, that's usually not that big of a deal. But there's some issues with people trying to move from company A to company B, and the house isn't eligible at company B, but they already canceled A, and now they literally can't get insurance anywhere on earth. And there's a few homes right now in Colorado Springs areas that are 100% not eligible for insurance. Nobody on earth will insure them.
No matter the price.
No matter the price. Yeah.
Wow.
And that's a newer thing as well.
And what do these people have? What are their options? They don't have any. They just have hopefully nothing happens.
Yeah. So if they're being non-renewed by their current carrier and they have a mortgage, then they can go to force-placed insurance with their mortgage. Now, that's not a good option, but that is their only option.
Gotcha.
Which is why I say, like, especially if you're looking at buying a house, one of the, if not the first step is that house eligible for insurance?
Okay.
Especially if you look around and you're like, well, there's a lot of trees here, then you need to check first. If you're
Right.
out off of Powers and 809, was that 80923, 80922? Not as big of a problem, but you get over towards the hill over here in Peregrine, man, it's tough. It's really tough.
Yeah, that area is definitely more likely to get fires for sure.
For sure.
So I'm actually posting your link here just so people can see it. So if you guys are watching this and I'm going to put it in the description below, but basically there's a jot form you can use to get a quote. It's free, it's quick and easy. And what Brandon, oops, sorry, my mic went off. What Brandon and I were talking about a few days ago was just say, hey, if we're going to go under contract on something, before you go under contract, do this first. That way, you know what to expect on the insurance side. So if you're listening, make sure that you're being proactive on your insurance early in the transaction, if not prior to. And that goes back to finding a good agent that's going to know this and take care of you. So make sure that you're asking the hard questions. We used to say, hey, just earnest money and inspection within the first week. Now it's like, okay, we hadn't even had a, we're looking at homes. Okay, you want to look at this one? Fill out the form. Let's get this going for insurance first. So, yeah, I wanted to keep this kind of short and sweet. We could probably talk about insurance for the next couple hours on the things going on in Colorado. I know a lot of companies are pulling out, and the reinsurance. That's a whole other topic. Probably not. People, we're going to bore them to death on that stuff. But
it's so exciting. I mean, come on.
Yeah, I know.
I
like
conversation about reinsurance.
I know, right? Like, man, people are losing their butts out there. But anything else to add as far as advice goes? Anybody for insurance?
Let's see. I'd say the last thing is making sure whoever you're using, right? I know I'm not want to know like 900 insurance agents, right? Like,
yeah, exactly.
I'm not the only one, and I get that. But make sure whoever you're talking to ensure your home and auto or your business actually know what they're talking about and actually know what is going on in Colorado. I can't tell you how many people it's all wrong. They're paying too much because they don't have enough coverage and they don't know anything about insurance. And that's not a great place to be in, because in less than a couple minutes, like 5 minutes, you can learn enough to at least know what's important. Right. So just please make sure that you're using somebody that's reputable. Right.
Yep. Yeah, and I foot stomp, like, you can use whoever you want for insurance, right? And it's not one of those like, oh, you have to use this person. But I think that huge part is 100% true. Education. So if you're having a conversation with people, they don't want to clarify, they don't want to educate you, like, just start asking those hard questions. If they can't answer them, there's enough people out here that are quality agents, both insurance and real estate, that can get it done for you. So
for sure.
Man, I appreciate you taking the time. Hope this was helpful for people out there, and hopefully we can maybe get some more scheduled. But thank you, appreciate you.
Absolutely,
man.
Yeah, for sure.
All right, I'm gonna kill the stream, and then we'll stay on for a second.
Okay.